Hello, everyone. This is Stephen Richardson. Um, coming to you today again, continuing our study of the semiconductor materials and equipment industry, looking at LRCX. I'm switching it up a little bit so you can see me. The, Up to now, you've just seen the slides, so you might as well put a face with the voice. So, if you like what you see, click subscribe. Tell your family, tell your friends, tell your enemies and tell them to subscribe. I also have backyard musings, edgy commentary, current events, and law school dash essentials to help law school students pass their exams and the bar exam. Okay, here's a disclaimer. This is educational purposes only. It's not advice, financial advice at all. This is just a study that I'm doing, and you make your own decisions. Do your own research. I'm just showing you how to do it. Okay, so Lamb Research, LRCX. So up in the left corner here, you see I bring all the numbers together from these websites so that I can make a judgment on the sales growth. And you can see the bottom right is their sales, upright and parallel. There's a little bit of choppiness, but for the most part, upright and parallel. Um, and then you can see recent quarterly sales and what the 2-year analyst estimate says about sales. And so I gathered all this data and I made a projection of 7% sales growth. And that's what it's going to look like. You need to make your own. You go to all these websites, gather all the data together. We've already talked about that. Okay, the earnings per share projection. Again, my website. Here's my spreadsheet. Sorry, and all of the websites right here. And I'm saying that there's a 9%. I'm thinking there's going to be a 9% earnings per share. You can see recent quarter. You can see trailing 12 months. And here's the preferred procedure, 9.6. Is that preferred procedure? Is that the analyst estimate? Yeah, that's analyst estimate from SSG. Preferred procedure is 2.9%. So I'm saying I'm being a little bit more aggressive, a little bit more aggressive than value line. Value line is pretty conservative at 4%. Okay, so I said 9%. So we plug the numbers in, and here's what we get for the 7 and the 9 gives us this for projected sales, and this for the projected earnings per share 5 years out. And this is what it looks like combined together. All right. LRCX Lamb Research has good strong pre-tax profit. It's earning more than 5 to 7% per annum, so that's good. It's facing bottom line issues because of favorable customer mix, partially offsetting by unfavorable absorption costs. That's from their quarterly report. And research and development has risen due to jump in supplies and employee related outlays. Selling and general administrative expenses have increased because of an uptick in personnel costs. So that's eating the bottom line too a little bit. Management has initiated a restructuring plan to better align with the company's cost structure due to its outlook. So I think the management is seeing that it's going down in these quarters and they're going to restructure. So might be some more chop next quarter. This might not get on its feet for 2 quarters, is what I'm thinking. So that all went into the projection too. Okay, price earnings at a glance. There's the snip. Current price earnings is 32.9. You got the average, you got the average high, average low. These are some pretty good earnings per share. Trailing 12 months is at 25.86. That's really good. It's got a really good dividend too. I like that dividend. But it's a little bit low, but still, I mean, it's a good dividend. It really is. Um, and it's increasing. Is it increasing? Yeah, it is increasing year over year. But that percentage, though, the percentage payout, it was kind of decreasing for a little bit. We'll watch that carefully. Okay, so we put in the data for the price earnings ratio for the current, the average high, average low, and the sector and the industry is the same as we've been studying. The peg changed because of our estimate on the which means it's slightly overvalued because of our estimate on the earnings. And then we got the trailing from the value line, right? So here's this price chart. So we know it can keep going up in 5 years. This is what it's done. A little roller coaster here. Would have been nice to get in right here and climb it up, but it can definitely double. I think it can definitely double in 5 years. Okay, so the high PE projection. So I chose 21, and um, you're going to have to choose this for yourself, but you have that previous slide to look at all the sector, and well, you don't want to look at the sector too much. The industry is what you want to look at, and it's current and it's high. So I chose 21 because it's pretty much Lam Research has been pretty consistent in its highs. So I chose 21. That gives me a high stock forecast of over $1,100 for this stock in 5 years. All right. I thought it was conservative. Okay. Low PE projection. I snip the screen. Once you click that green box for the low, this pops up. And I chose, I can't even read it, 12. I chose 12. And you look at here's the current low, current and 5 year average and the average low right here. And then you've got the other, here's a snip of the low PEs, and it's pretty consistent. The low PEs have been pretty consistent. So I went with 12 in the 5 year window because that I think that'll be consistent. Okay, so we put the numbers in. 21 and 12, right? Um, it's undergone two stock splits since 1990, 3-for-1 in 2000, and 3-for-2 in 93. Can That's the big question to ask. Can it reach 1123? I think it can. And so here's the zoning where you have the buy, the hold, and the sell zone. In the next screen, we're going to see what that looks like graphically right here. This is an aggressive approach, 33, 33, 33. You could do 25, 50, 25, but that would be conservative. And then here's the fair market value. Um, Morningstar is saying the fair value is 660. It's currently at 834. And then the 5 year price potential puts it at a hold, 0.5 to 1. That's not a good upside downside. CFRA, no, Global Net Advantage, also has it as a 3-star hold. Um, let's see. Okay. Overvalued, 26% premium. Okay. All right. We hit everything on this slide. Yeah. Okay. All right. So taking a look at the dividends, Lam Research has some pretty good dividends, average 24.2% payout, right? That's good. Debt has also a downward trend, averaging 45.8 over the last 5 years, which is higher than what we want, 30%. But their most recent quarter, um, um, well, this would normally 37.9. That would eliminate it from the contention. We'd move on from this stock because that's a lot of servicing of the debt. So you might put it on a watch list to see if it moves. If there's a market correction or they improve in those next 2 quarters from the restructuring, you might put it on the watch list. Okay, thanks for joining me. Semiconductors, materials, and equipment. This concludes the 3 stocks we looked at: AMAT, ASML, and LRCX. And our next slide, we're gonna show the stock comparison guide that puts all 3 together. If you like what you saw, click subscribe, tell your family, tell your friends, tell your enemies. And I also have 2 other channels right here. Take a look at them if you're interested. Thanks, and have a great day.